The stock market just changed forever, and it is all thanks to blockchain technology. You know, the thing that 95% of people either don't understand or think is an absolute scam? Well, it's coming for the stock market as Robinhood just unveiled their plans for tokenized stocks, and XStocks is also getting in on the action. So what does any of this even mean? What are the pros and cons of tokenizing stocks, and how can you start trading them today? Ladies and gentlemen, welcome back to another Crypto Gorilla video. As usual, I am not a financial advisor. Hit the subscribe button and let's jump right into it. So when most people hear the word blockchain, they probably think Bitcoin, Ethereum, maybe some meme coins, or overpriced NFTs, also known as non-fungible tokens. But let's strip away the overpriced monkey picture and just focus on the token part, because that is the core of this technology. Over the past year or so, a narrative has been brewing where some of the top names in finance, like Larry Fink, the CEO of BlackRock, have been talking about the tokenization of assets.
We believe the next step going forward will be the tokenization of financial assets.
Now, if you don't know BlackRock, they manage trillions of dollars. If you look up literally any of the major stocks from Apple, Tesla, Nvidia, you're going to see BlackRock as one of the top holders. So when Larry Fink says that everything from stocks to land, real estate is going to be tokenized, you should probably pay attention. But this isn't a brand new narrative. Crypto natives have been saying this for years. If we go back to the first ever video I created on NFTs, even before I took my first trade, I was talking about the tokenization of everything from concert tickets all the way to real estate. But now we are finally starting to see it happen, as Robinhood just announced a 3-phase rollout to bring stocks fully on chain. Now, phase 1 of their plan is already live in Europe, and in this phase, they're kind of tokenizing stocks, but they aren't fully on chain, and they're still limited to the Robinhood platform. But the big update here is you could trade 24 hours a day from Monday to Friday. Now, in phase 2 of their plans, which is expected to launch within the next few months, they are utilizing Bitstamp, which they recently acquired, which is going to unlock 24/7 trading. So during regular hours, you are going to use the traditional markets, which have a ton more liquidity, but when it's the weekend, after hours, or even holidays, you're going to be utilizing the tokenized stocks through Bitstamp. However, in phase 3 is when things get very exciting, because this is when Robinhood is bringing everything on chain by utilizing blockchain technology and unlocking the power of decentralized finance. Now, for the time being, it is on Arbitrum. However, they are going to be rolling out their very own layer 2 chain called the Robinhood chain. Now, Robinhood isn't the only player making moves here. Over on Solana, there's already over 50 tokenized stocks available through this platform called XStocks. So if we head over to their website, you could see there's a bunch of major stocks that you recognize, like Google, Amazon, Apple, Bank of America, and so on. And if we click trade on one of these, you could see you could trade on both centralized exchanges like Kraken, Bybit, and Gate, as well as decentralized exchanges like OKX Wallet, Phantom, Raydium, Jupiter, and so on. So let's just grab one of these at random. I'm just going to take Google and head over to OKX Wallet. I'm just going to paste in the contract address the same way I would with an altcoin, a meme coin, whatever. And here you can see Google. If I click it, we can see it on the chart with the price action. And here I could purchase shares of Google in my Phantom wallet, so my decentralized wallet, within seconds. And these stocks are all backed 1-to-1 by the underlying security. So if I buy the tokenized version of Google, there is actually a stock behind that. Now, there's still laws and restrictions when it comes to all this stuff. So before trading, I recommend you read their legal documents to make sure you're not breaking any rules, as there's a reason why Robinhood only rolled out their tokenized stocks in Europe and not in America, because the rules still aren't clear in America. However, I have high hopes that this stuff is going to advance quickly with the new administration that is very pro crypto and pro technological progress. Now, if you want a full tutorial on how to trade stocks on a decentralized wallet, let me know in the comment section down below, and I'll make sure I get that done. But now let's move over to the pros and cons of tokenizing stocks, as Really, there's a lot of them. Starting off with the pros, the first one is access and flexibility. With tokenized stocks, you are no longer locked in to a specific platform or a regional broker. If you're in Asia, you can easily trade US stocks, and you could do this from anywhere at any time of day. We are unlocking 24/7 trading. You're no longer limited to I think it's 9:30 till 4 p.m. Monday to Friday. You can't trade after those hours. You can't trade on weekends. You can't trade on holidays, which is really frustrating. When something major happens on a weekend and you know your stock is going to moon or crash on Monday, ideally, you could trade it on a Saturday afternoon. Instead, you have to wait till Monday morning, or if it's a holiday, Tuesday morning, and then there's a major lineup because a lot more people are aware of the news. Now, do we need blockchain technology to unlock 24/7 trading? Absolutely not. It is totally possible to do with the traditional markets, but for some reason they haven't. So this is kind of forcing their hand. The second pro is ownership and self-custody. When you buy a stock today, you don't actually own it. You just have rights to it until something goes wrong. However, with tokenized stocks, you can self-custody your assets, meaning you can hold them in a decentralized wallet, trade them on a decentralized exchange, and nobody can freeze your assets, nobody can ban you, and nobody can tell you what to do. We have a saying in crypto, which is not your keys, not your crypto. The same applies to stocks. Not your keys, not your stocks. Now, I understand the convenience of using a centralized exchange like Robinhood, E-Trade, or whatever the other platforms are out there. And in most cases, you're going to be fine. You can trade on centralized exchanges. However, when there's an extreme scenario that happens, when a company goes bankrupt, that's when you're not going to want to have your money on these platforms, and you're going to wish you had custody of your own assets. FTX was the perfect example of this. After they went bust for gambling our money or whatever they did, millions of people had their funds frozen. They couldn't withdraw it from the FTX platform. And while yes, FTX has finally started doing refunds for their users, the downside is they sold your assets at the bottom of the market without your permission. So if you held one Bitcoin on the FTX platform, yes, today Bitcoin is at 110,000, but the refund you're going to receive is for 16,000 or whatever price they sold at. So you missed out on almost $100,000, and you have to wait 3 years to get your refund. Now, yes, stock platforms have a ton more regulation as well as insurance, but that insurance is limited, and you're still gonna have a headache going through the whole process to claim your stocks or your funds should the platform go out of business. Which brings us to point 3, permissionless transfers. Right now, let's say you wanna move from Robinhood to whatever platform you want to use, there's a whole process you have to go through. You have to contact support, you have to pay them a $75 fee. It takes up to 7 business days. So weekends don't count, holidays don't count, up to potentially 2 weeks to get your stocks transferred and your funds transferred. And in that time, you are not allowed to sell your stocks. In 2025, that is ridiculous. If you're using tokenized stocks, on the other hand, it is just like sending crypto. That means transfers are instant, verifiable on the blockchain, and cost pennies. There is no paperwork and no gatekeepers. With the traditional markets, there are a ton of delays. There's a ton of middlemen. But with crypto, it is all handled by the blockchain. So it's all handled through code. The next benefit is fractionalized ownership. So let's say you want to buy a share of Tesla stock, but you can't afford the $300 price or whatever Tesla's at right now. With tokenized stocks, you're able to buy a fraction of a Tesla share. So you're able to purchase 0.001 Tesla, the same way you could purchase 0.001 Bitcoin if you can't afford a whole Bitcoin. However, the biggest benefits come through the whole decentralized finance integration, as this is where things get really powerful. Because all of your stocks now live on chain, you could plug them directly into different DeFi protocols. This means you can tap into automatic yield strategies. You can use your stocks as collateral. You can earn all of your dividends on chain, and all of the typical things you get with a stock on a centralized platform still apply here. If there's a stock split or a reverse stock split, it's still going to work with your tokenized stocks. Your voting rights are still preserved, and they're actually all tracked on chain. chain. So there's a ton more transparency when it comes to this stuff because the blockchain is public. Everything is auditable and verifiable. So there are major upsides to having tokenized stocks. And I think it's inevitable that this is not only going to be applied to stocks, it's also going to be used for real estate. It's also even going to be used for our voting systems. There are so many benefits to utilizing blockchain technology. And in my opinion, it is inevitable that it is going to be ingrained in everything we do through our day-to-day lives. But there's also a ton of drawbacks here, especially with stocks when it comes to the early phases, especially in the early stages of implementing this tech into the stock market. So the first one, which we already looked at a little bit, is going to be regulatory uncertainty. Every country has their own laws around stocks, custody, trading, and security. And bringing stocks on chain creates this legal gray zone that we have to get by. There is a reason that Robinhood is only starting their rollout in Europe and not immediately in the US. The second drawback is around custody. Even though you can self-custody your tokenized stocks, somebody still needs to custody the real stock because everything is backed one-to-one by a real stock. So depending on the platform you use, who's the person who's holding that stock? Are they trustworthy? Are they solvent? Are they compliant? Who's responsible for redemption? Who's responsible if something fails? If something gets hacked and a thief has my stock now, like what happens? There are a lot of questions to be answered. The third drawback, at least for now, is going to be low liquidity. If we look at the price of Google, we can see after hours it is currently trading at around $180.50. But if we look on a decentralized platform, we can see that the Google tokenized stock is currently trading at $188. So you're actually paying a premium above what the aftermarket price is. And that has to do with low liquidity. We can see there is only $100,000 of liquidity in this tokenized stock. And look at these price spikes that we're seeing here, both on the upside and the low side. This is somebody like one clipping into their stock and then somebody one clipping out here. It went all the way to $210. This is price action that we are not seeing in the actual Google stock. Now, over time, the platforms are definitely going to adapt to this and there's going to be way more liquidity that's flowing here. But in the short term, you can expect some slippage and some spreads. The next drawback is complexity and a learning curve. Using decentralized wallets, using a decentralized exchange is definitely not for everybody. There is a huge learning curve to doing this, but on top of that, there is a security risk. How often do we hear about people getting scammed for their crypto, their NFTs, or simply losing their wallets because they lost their private keys? There is no bank, there is no stock exchange or broker that you can call to fix the issue for you because you are now responsible for your own assets. So if you make one simple mistake, your stuff is gone forever. And then the fifth risk or drawback is going to be a technological risk. If there's a bug in the smart contract, if there is a issue with the blockchain, right? If Robinhood chain goes down or if Solana goes down, you're not going to be able to trade your assets. So while yes, tokenized stocks bring a ton of benefits, we're still really early and we're going to have to work out all these kinks. And I think it's going to be still a while before this is adopted by the masses. Now, there's also a debate if tokenized stocks are going to take away liquidity from the altcoin season that everybody has been waiting for, which is a genuine concern because now we have a brand new asset that crypto bros can ape into. So liquidity just got spread even more thin. But that does it for today's video. I hope you enjoyed it and found it educational. Let me know in the comments down below what video you want to see next. If you enjoyed it, be sure to give it a big thumbs up. If you haven't already done so, would you kindly hit that subscribe button, smash that bell notification. Thank you for watching another Crypto Gorilla video. Peace.